Did you know that Raoul just made an unexpected shocking warning for Tesla stock investors? Tesla stock investors are almost always ready for a surprise about the company, whether good or bad. Stay tuned and keep watching to find out what Raoul has to say. It takes a lot to manage to shock Tesla stock investors, as there is almost always news about the company whether they like it or not, either good or bad. Still, experts like to warn investors so they can be prepared and allow them to make a decision based on their opinion and presented data. Today, you will find out this unexpected shocking warning for Tesla stock investors from Raoul. In a previous interview, Raoul said that Elon Musk initially prevailed because of the equity market, which allowed him to raise a limitless amount of money. This, in one way or another, explains what is happening now. Raoul is an economist, investment strategist, and CEO and co-founder of Real Vision, a financial media brand. Powell is also the co-founder and CEO of Exponential Age Asset Management, an investment management company, as well as the founder and CEO of the Global Macro Investor, a macroeconomic and investment strategy research service. In total, he has over 44 years of experience in the finance industry. Raoul always had a head for investments, but his climb to the top started with his position as head of European hedge fund sales. This position was in Goldman Sachs, specifically in the equities and equity derivatives section. After a successful and lucrative stint with the company, he moved on to GLG Partners as one of their chief portfolio managers. With the experience and the money he earned from both positions, he launched his own company in 2005, the Global Macro Investor. The Global Macro Investor was a service dedicated to providing financial information and was followed by top players in the pensions and hedge funds field. The company continued to expand its offerings through consultancy. The business grew steadily and offered promising returns based on sound performance. In 2013, he founded Real Vision due to being upset with the way media companies were unable to adjust to the market. He decided to launch Real Vision with Grant Williams as a way to offer on-demand finance to the masses. He took the traditional media outlet mold and boosted it to the next level by offering advice in newsletters and through other media channels. What set his company apart was that it provided actionable advice to those making a profit in the field. He is known as the one who opened up finance to the common man in the form of a video streaming platform that can be viewed anywhere. Many people call him the Netflix of assets that are based in the digital world. Though he is most well known for the streaming platform, his investing prowess predates the service. Raoul has been successful in the finance industry, thanks in part to his own ability to foresee the market. His skill was further supported by the comprehensive education he received in economics and law from the University of Plymouth in the UK. Paul recently said that Tesla's stock price might go up significantly due to various reasons. As earlier mentioned, Paul mentioned in a previous interview that Elon Musk initially prevailed because of the equity market, which allowed him to raise a limitless amount of money. This, in one way or another, explains what is happening now. Numerous people are willing to pay any price for equities like Tesla. That said, companies that do not require money are doing well enough, which signifies that Tesla stock price will possibly continue to go up. In March, Paul posted on his Twitter, "Want to hear the justification for Tesla with a $20 trillion market cap in 2035? You either will hate this or find it interesting. It matters not. I've known Tim for 25 years. He is no sensationalist. Could he be wrong? Sure. Even if he is wrong by 50%, it's a $10 trillion company." Seth Goldstein, an American entrepreneur and angel investor, agrees with Paul in terms of the Tesla stock price soaring and said that Tesla is expensive. Goldstein also mentioned that he expects Tesla's gross margins to increase in the long run due to the company's ability to lower the manufacturing cost of a unit, as well as the launch of its new subscription software. Raoul said that he is far more excited about emerging markets than commodities. He said that commodity cycles will be less pronounced in the current technology-driven world with an aging population. Many analysts support Paul's claims. They believe that the coming decade is going to be defined by emerging market domination. By definition, an emerging market is a market that has some characteristics of a developed market but does not fully meet its standards. This includes markets that may become developed markets in the future or were in the past. Do you think Tesla's stock price will increase or decrease in the next months? Share your thoughts in the comments section below. Tesla, for its part, is doing extremely well and is expanding beyond the EV market and becoming an AI company. Tesla's newly opened Gigafactory in Germany signifies the company's rapid growth. This aims to allow the company to make an extra 500,000 vehicles annually, which signifies a significant production increase as well as a decrease in the costs associated with importing cars to Europe from Tesla's Shanghai factory in China. Moreover, this implies selling many more vehicles in Europe to European customers who might not be as familiar with the brand as US consumers, potentially significantly growing Tesla's customer range. Aside from the Gigafactory in Germany, Tesla also started shipping vehicles from its newly opened Texas Gigafactory. Before its opening, Tesla vehicles sold within the US were made at the company's factory in Vermont, California, which has the capacity of only 500,000 automobiles per year. That said, through the California factory, along with the factories in Germany and Texas, Tesla will be able to significantly boost its production. The company expected to double its production in a few more years. Tesla CEO Elon Musk believes that with the Texas Gigafactory, Tesla will be a mass producer of electric vehicles even before the year ends. In line with that, many investors get more and more interested in Tesla and its stock after seeing positive news about the company, which further improves the sentiment about Tesla. When Tesla stock jumped 8% in March, more investors became interested in the company and its stocks. In an interview with Tim Davies, Director of Research at Holland Global Investments, an Australian venture capital firm, Paul and Davies discussed Tesla's history and future, its stock price, and what might happen in the short and long runs. It can be noted that Davies is known to be a huge Tesla supporter. Besides Davies, JP Morgan lead automotive equity research analyst Ryan Brinkman supports Tesla and said that the EV company has the advantages of a very unique business model and an appealing product selection in cutting-edge technology. Brinkman also mentioned that he sees Tesla products as bold, unusual, exquisite, and immensely exciting to drive. He also said that the company is driven by revolutionary leadership and is supported by a functionally strong management team. In June, RBC Capital analyst Joseph Spack upgraded Tesla stock to outperform and put a price target on the company's shares of $1,100. Spack thinks that Tesla has a competitive advantage over its peers because of its supply chain and vertical integration. He said in the investor note that the company's early focus on vertical integration is likely to pay off. Spack also thinks that Tesla's automotive margins could be higher than 30% in the second half of the year as the average selling price for its vehicles increases and the company's Shanghai, Berlin, and Texas plants boost vehicle production. It is a well-known fact that investors are worried about rising inflation, supply chain issues, and the potential for an economic slowdown in the US, all of which have sent Tesla's share price on a wild ride over the past year. However, despite all of the volatility in the market, many investors still have a long-term perspective on the EV maker. In fact, despite the worldwide pandemic in 2020, Tesla's share price has rocketed upward by more than 700%, delighting Tesla's investors and loyal fans while leaving many seasoned Wall Street analysts scratching their heads. While the Tesla is from another planet, it has the same impact as an iPhone, a total step change towards minimalist, a car as an app, and a stupidly fast one at that. You might not like leaving the past, but the future is here, says Raoul through his Twitter account in March. For more Tesla stock content, visit our channel and watch our other videos.